Hey everyone, welcome back to the channel, back here with another video. Today I want to talk about Wirecard, the investment that I made last week, what essentially happened and what I learned from this investment and things that I'm going to take from going forward. But yeah, so essentially I did mention it in my last portfolio update that I'm going to create another video, and here it is. So yeah, if you're new to the channel, don't forget to like, comment and subscribe and help this channel get to 1,000 subscribers, and tell you how you can get 3 free stocks later in the video. Anyway, so yeah, let's just get started. So with Wirecard, I started buying into Wirecard last week. So essentially in episode 34 I did say that I did purchase 4 shares around 26 euros, and I was expecting it to potentially bounce back. It was a very risky investment. To be fair, it was more of a gamble, I'd say, and it hasn't really panned out. So that's what this video is about. So I started buying them at 26 euros, which is about here. And obviously when it opened again, it tanked again to around 16. So, and then it went down to 12. I bought like 2 more, expecting it to go back to 18, but it didn't. And it just fell to about 10, and then 4, and then €1 something. And I was like, you know what, I've messed up here. And along the way, they've also basically changed what they said about missing 1.8 billion euros. They basically said, oh, it was in the Philippines, and then they said, oh, it might not even exist. So basically this company has collapsed. The former CEO has been arrested and is on bail. So essentially, yeah, this company has had global sophisticated fraudulent activity, I'd say. So it's not ideal, and pretty much they are going to go bankrupt. They've already filed for insolvency. So yeah, bit of a shocker, and I've lost about £150, which isn't great, but at the same time it's not a massive amount of money. So yeah, like, it's not a massive amount of money, but at the same time, I'm grateful this happened early on rather than later on, to be honest. So if I was investing later on, let's say 2-3 years down the line, I'd probably have a lot more money to invest with. So if I did make a decision later on, and it would definitely hit me harder than it has now. So I think there are a few key takeaways that we can go through from this experience. More fuel to the fire is essentially the FCA, which is a UK regulator for financial services, have suspended Wirecard's subsidiary, which is Wirecard Services UK or something like that, which did provide services to like a number of fintechs such as Curve, who have been severely impacted by this because they do rely on Wirecard services for their cards that are issued. So they sent an email out saying that they have had to suspend services until they bring that in-house or find another supplier, and that obviously has had a great impact on them negatively and their users. So obviously there's going to be some sort of backlash between those fintechs with the FCA and something like that. So in the meantime, it has affected companies that have used them, and it's going to cause them a lot of headache trying to find a new supply in such a short amount of time. There was definitely no notice for them from the FCA, so big problems there. So I think they've pretty much lost all their UK clients, so it's almost a guarantee that they're going to go bust, and whoever's investing in it has probably lost all their money. So yeah, so it's not a great scenario. So I am keen to see what others say about Wirecard. So yeah, let's just run through that right now. So first of all, let's have a look at Webull, and they, as you can see here, that it has dropped massively, but I'm more interested into this side here where I'm looking at the analysis bit. Obviously I don't know how frequently this is updated, but from the looks of it, it does look like it is not accurate. So based on 13 analysis, 7% say sell, 38% say it's underperforming, 23% say it's on hold, buy say 7%, and strong buy is at 23%. However, I don't agree with this. I think it's based on their previous financial results. So yeah, like there's a little disclaimer here. So this I'd probably say is a very inaccurate guide. Pricing target. So I think the lows were kind of on target. So highs of 300. So again, it's at €1.60, and I'd definitely say it is not a buy. Let's have a look at the ETF weighting. So if you did have any of these ETFs, you're probably going to be affected. So yeah, if you do have any of these ETFs, you're probably going to be impacted a little bit anyway. So let's move on to Simply Wall Street. As you can see here, that it is showing green on everything. Looking at this, it is probably good to do a little bit more research rather than just relying on Simply Wall Street. So for example, here we can see that looking at the executive summary, it does look like it's a really good company. Value, future, past, and dividend are all really green, and it does look really good. However, that's not the case, is it? So trading at 98.3% below its estimated of its fair value. Earnings are forecasted to grow at 24.23% per year. Earnings grew by 41.7% over the past year. Pays a high and reliable dividend of 15.61%. So essentially, looking at this, it does, you would be like, wow, this is great. But the truth is, it's not. Because they have committed fraudulent activity, and I think with relying on sites like these, that it may not always be as reliable as you would hope. Worth bearing in mind that you would need to do additional research into this, like around the news and stuff like that. So looking at this, you'd be like, oh, smashing, I'm gonna invest in this, but that's not the case. Just hold on. So you can see that if you exclude the last month, you'd be like, oh yeah, it's doing all right, it's not bad. But if we go to the last 3 months, it has seen a massive drop. So stable share price, WI share price, is volatile for the past 3 months. So that should be an indication for you to do a little bit more research and to find out why it's been volatile. So in this case, it's the fraudulent activity for filing accounts, saying that they had 1.8 billion euros, but they didn't. That's impacted them quite a lot. These stats do not look great at all. Fair valuation, it's saying that a fair value is at 75 euros. However, it's currently trading at €1.28, and it's probably going to go to zero soon. So I am very pessimistic about this now. I think it's definitely going to go bust. Moving on to these, they look alright, but obviously they're not accurate with the issues that they're facing. So yeah, these do look great, but I feel like it's not that accurate. So it's worth, like I said, it's worth bearing in mind that you should definitely do additional research rather than just relying on Simply Wall Street. Yes, it is nice to get a nice overview. So looking at the ratios, they do look good. They're all green and they look alright. Future growth is at 24.24%. However, I don't think that's going to be accurate now, especially with the fraudulent activity, banks recalling their loans and stuff like that, and they filed for insolvency. So I definitely see that not panning out. These all look great, but so analysis, future growth forecasts look good. However, again, like looking at this, you would be like, oh yeah, it does look good. However, that's not the case. It is gonna pretty much go bankrupt. The dividend yield is at 15.61%. And so yeah, that's pretty much it from these website. So I would definitely recommend doing a little bit more research additionally to just looking at Simply Wall Street or like Webull, as the information may not be up to date at the current moment. So it's worth also reading around the latest news around that company. Key takeaways that I've learned from this is essentially do a little bit more research. So if there is an issue like fraudulent activity or something that has caused the share price to drop, I would probably say a lesson that I've learned is to do a little bit more digging into it and find the reason why. How is it going to impact them? Are they going to make it through? And stuff like that. Ask those questions before I put any money into that company. Also, I guess when it comes to fraudulent activity, is to stay well away from it. Even if I've got money invested in it, I'd probably say like first instance, I'd probably look to get that money out as soon as possible before it drops considerably. So yeah, that's pretty much all what I've learned. I am a little bit grateful that it happened to me early on in my investment and for a small amount of £150. However, if it was a larger one, say like Boeing, which is about 600, I'd be pretty gutted. I am not to say that I am not gutted by the Wirecard. I am still gutted, but it doesn't hurt as much as something like Boeing or like Alibaba, stuff like that, where I do have a lot more money invested in it. So £150 for me is manageable to lose. It's not ideal, but it's something that I can accept. But yeah, so I'd be interested to know what you guys think. If you haven't already subscribed to this channel, please do so and help us get to 1,000 subscribers. Let me know what you guys think. Have you had a scenario that a share has filed for bankruptcy or has dropped considerably? What lessons have you taken away from that? I'd be interested to know. Share your comments down below. But yeah, that's it for this video. If you're interested in trying out any of these platforms, you can get up to 3 free stocks from one from Freetrade, one from Trading 212, and the other from Stake. The links are in the description. And yeah, that's it. Don't forget to follow us on Twitter and Instagram at Inkmatic, or visit us at inkmatic.com. So yeah, that's it. See you in the next one.